Today we're going to be diving headfirst into how to handle buy cost when repricing your Amazon inventory. The same symbols apply with any repricing tool, but specifically we're going to be talking about new price today, so let's go. What's going on? My name is Matthew Osborne and welcome if this is your first time here. Today, as I said, we'll be talking about how to factor in buy cost when repricing your inventory. If you like content around selling on Amazon, consider subscribing below to see when more content just like this is released. I'm going to be giving away a year subscription to New Price this coming month, so stick around to the end of this video to hear how you can be entered to win. Alright, this topic I've been wanting to cover for a while now because I get asked this exact question constantly. Here is the big secret. You do not need to factor in buy cost when repricing.
What?
What?
What? What?
What?
Let me explain, and let's start out by talking about an economic term called the sunk cost fallacy. Alright, the sunk cost fallacy is when someone continues a behavior or an endeavor as a result of previously invested resources, stuff like time, money, and effort. When repricing items on Amazon you have already purchased, your buy cost is now a sunk cost. You are not getting it back. Even if you could get the item sent back from Amazon for 75 cents or whatever it costs now to send back an item, collect all your receipts, go back to the thrift store you purchased it from, and get a refund for $1.50 you spend on it, it likely wouldn't even be worth your time. Let's take a look at the numbers and this will probably make more sense. We'll use nice round numbers just to make it easier. So let's say you buy a book for $5, right? That money is now gone. You now have a book instead of $5. So our current running balance in the bank would be negative $5. Alright, now let's go into New Price, the best repricer ever built. If you want to reprice this book that you purchased for $5, you see the market has shifted, it's no longer worth what it once was, and New Price has an estimated profit of $4. Except you notice New Price isn't taking into account your buy cost, just the Amazon fees, therefore your actual profit on the book is negative $1. I've heard multiple people reach out with this exact type of situation as the one I described. They don't understand why New Price isn't taking into account their buy cost, and they show me this example and say if they didn't do the math themselves and factored in, they would have lost $1, but they tell me thankfully they avoided doing that and disposed of the book instead. Alright, but what really just happened? Did they actually avoid pricing the book at a loss? What they actually did was increase their losses by not selling the item. Now not only are they out their original $5 plus the cost to dispose the book, whereas if they would have actually just repriced the book to where it would sell at $4, they would have only been negative $1 on the entire transaction. Factoring in buy cost to decide where you price a book is normally always a bad idea. If the market is tanked, sell it for what you can, make at least some of your original investment back, or if it's tanked so much that you're going to lose more than the cost of disposable, that's a different story. So for example, let's say after Amazon fees, if a book sells at the price I have it listed at, I'll make negative 10 cents. Most people dispose of this book, except they don't take into account consideration that if they dispose the book, it'll likely cost them around 25 cents to sell it, to dispose of it versus selling it and only losing 10 cents. The way the profit estimation is set up in New Price shows you how much money you'll be deposited into your bank account if the item sells at its current price. This is the only number you need when repricing to see where it should be priced at. If you are factoring in your buy cost in and repricing your books higher than you would have otherwise, you are either overpricing your books to begin with, or your current pricing strategy is underpricing your books if they truly could sell for more than what you're listing them at. Now, all this to say, buy cost is not an important factor when repricing books specifically, but what's more useful is a repricing strategy to get the most money for the books you do have with not overpricing them or underpricing them. Buy cost still is an important thing though, don't misunderstand me. If you're losing money on every single book you sell, it's a very bad business model. And this is where tracking your buy cost and inputting it into something like the tracking spreadsheet, linked below, is so important. If you look at your records in the tracking spreadsheet and see that every book you've sold in the $10 to $12 range has lost you money, it's either time to adjust your triggers so you're buying different books or find ways to lower your buy cost. This is something you adjust when you purchase the books though, not when you reprice them. The cost to buy that book has already been gone at that point, and I hope this quick example makes sense. If not, please leave your questions in the comments below and I'll answer them and create a follow-up video if need be. Now, as to how to enter to win the free year of New Price, first subscribe to the channel, then leave a comment down below and let me know the main feature you would like to see added to New Price, or a feature you see missing from your current repricer if you are not using New Price or if you're using something else. Leave that in the comments below. Subscribe to the channel. I'll be picking from those people to release New Price, a free year of New Price too, in the coming month. I'll see you guys in the next video.